Looking at a US dollar Swiss franc 60-minute chart, we have formed a base of support here at 29.60, and we are going to watch this rally. Price comes up to this level of support, resistance level, and bounces, and from the high of 70 to the close of 54, so a 15 pip bounce off of there, and then it just consolidates here for a while. Looks to me like there was some stimulus in the market that created a lot of volatility. Moving into the next day of trading, we see a nice rally, and we are testing these highs right now. We've moved from a base of 130.30 to 31.30, so a 100 pip move, and the last 2 hours was quite aggressive. Again, these rallies are often decreasing volume, increasing price, and decreasing volume, and you're often subject to a bounce at a key level like this. The high here is 31.25. It went to a high of 31, so 6 pips beyond, closed at 14. Now we're testing it again, so several attempts to get through this high. You can trade it as long as price trades and holds below this 31.20 level. You can trade it, but be careful because price might come back up and test it again. So you need to leave yourself enough room. Let's see where the close was. 13. If the close is 13 and the high is 31, let's say 20 pips to the high. Give yourself another 10 pips to say 40. So if you trade it short, at okay, the close is 13, but you could trade it anywhere in here. So let's say 15, and your stop's at 45 for a 30 pip stop. Trade it short here. Now price comes back up and it tests that level to a high of 34. Okay, so we're still good. If you're in this trade and you watch price come up and threaten your stop, just look to see if it's showing weakness. I mean, your stop is where it is, but you want price to again move below these highs, and more specifically below 31.20 for your trade to be good, and we do so here. And the nice thing is that if we traded it at say 15, now you're up about 10 to 15 pips, and now we need to get through 3100. Okay, now we're moving through, and at this point we've taken first profit. So let's just mark our first profit level at say 20 to 25 pips on the Swiss franc. The euro is more like 20. Swiss franc is 20 to 25, whereas the British pound is usually it's between 20 and 30. So say 130.90 is a likely place for your first profit. Remember to account for the spread. If you have not taken first profit in here, as price consolidates, you may want to take something out before it breaks out of the consolidation because it may come up and retest. But this is a critical level here now, and so we've taken our first profit and price has moved down, and what you'll want to do is you'll want to try and take some second profit in approximately another 30 pips. So what is most critically important here is that you take your first profit. Take your first profit. Then you can manage your stop accordingly. You can take the amount that was accumulated on the first profit and use it to fund the remainder of your positions. You will lock some of the profit in, and you can lower your risk on the remaining portion. So if we take 70%, then 20%, so 70% at 25 pips, 20% at 55 pips, then one of the ways that I would achieve this is like this. You see how this is the 162% extension and this level of resistance here. Take your second profit here just in case the market decides to come all the way back, test these lows and fall, right? Now you let 10 to 20% of the position run, and if you let it run, now we're at 130.40, and let's watch what happens now. Price stays in this range, stays in the range, then breaks through 130.40, 129.40, 128.80. Again, price moves to a low, comes back up, tests the range high, then moves into a new range low. Now look, okay, we entered here. We're going to mark this, our entry at 31.15. We will mark it with a green line. Price, you have to be willing. You see how we started at 31.15, we came all the way down here to 128.00. Price retraced all the way back up to 130.30. You have to be willing to endure these swings with the remainder of your 10% if you want to get in these big long-term position trades, especially if you're opening your computer every day and looking at your trade. Now we move into this pennant formation, and which way do you think it's going to break? Now which way do you think it's going to break? 31.15 was our entry. Now we're below the swing low. This was our last swing low that we needed to move below. Here, we needed to get below that low at 2,800. This is how you stay in a position trade. Price again moving in its ranges. Okay. Now we have to move below a new swing low. Now we're at 12600. Remember our entry was at 31.15. You have to live through all of this. You have to be able to stomach this. You have to have the stones to live through the price swings. Price swing after price swing after price swing. The biggest challenge that people have is being able to endure the time of the market. Okay? This causes you pain while this causes you pleasure. And there you go. We've come down to 119. Now we're at 120, 120, 150. We have a reversal pattern setting up. And we've gone from 131 to 119, over 1,000 pips on this trade. You can manage your stop behind Fibonacci's, use your daily chart, and manage your stops accordingly. But that's how you get into a position trade that starts at a short-term trade that could potentially be a major reversal point or be one of the components of a major reversal point.